people listening to this, and if they're a realtor and their commissions haven't gone anywhere for a year, they're probably like, are you sure about that? So there is the effect in the real estate market of, okay, we definitely see the Fed effect in an interest sensitive market, but outside of real estate, think about how effective interest rate changes are.
Welcome to The Path to Wealth, the show about well-being, fulfillment, and financial freedom. And I'm your host, Hannes Henschel. Welcome back to The Path to Wealth. I'm your host, Hannes Henschel. In this episode, we have Douglas Dowell, the Chief Investment Officer of Eagles Flight Equity Group and the host of the Real Macro Podcast. I just forgot the Real Estate Macro Podcast there. Douglas will be discussing how to self-direct your retirement, navigate asymmetric risks in real estate, and uncover the key virtues for success in real estate investing. Thank you for joining us, Douglas. It's great to have you on the show.
Well, thank you for having me. It's been an honor.
Well, I'm glad this is finally working.
Yeah.
Tell us a little bit about your real estate journey.
Oh, sure. Most of my experience, almost all of it really, was been a W-2 experience. Worked for Sprint as a network real estate guy, so basically help them acquire their real estate assets for their retail and also some of their tower stuff. Worked for a hotel REIT early in my career, Kansas City Housing Authority, so I've done lots of different things, W-2, and then in addition to that, I practiced law for a while as a bankruptcy attorney, and a little bit of real estate here and there, but mainly bankruptcy, so just a really broad horizon. And then lately it's all been focused on transitioning all that and converting that into entrepreneurial ventures, and that's where we're at right now.
So what did the bankruptcy tell us about what not to do in life?
Some of it is be lucky. Unfortunately, some of the worst cases I had were, folks that had medical issues and just terrible outcomes. And then, of course, over leveraging in credit cards is a huge one. I mean, that was, probably 60% of what I did had some overextension on credit cards. It was a high portion anyway. And then, of course, a few business failures here and there, but for the most part, it was, just over leverage for sure. So that's the number one lesson, I would say.
Do you feel like people don't understand how bad it compounds into the negative once you get into the credit card game?
Yep, 100%. And I have to admit it, even with that experience, it's hard to loop that into your brain, the feedback, and the way it's wired against you. Basically, the game is rigged against you because you're not consciously, it's not, for some reason, the human mind does not comprehend it. So you have to really discipline yourself. And unfortunately, most people, I would say, just aren't taught the lesson to begin with. And that's why, Dave Ramsey's controversial in the real estate circle because he's really kind of negative on real estate, I would say, because he got burned. Had some bad experiences. And if you touch a hot plate and you'd be like, hey man, don't touch a hot plate. And I get it. But from a beginning finance standpoint, he's really good about teaching budget. So it's something I recommend for most people if you're just starting out.
Yeah. I mean, it's the interesting psychology. Look, we get excited if we see like 15 to 20% annual return. But we don't get scared when we see 18 to 22 on the credit card.
Yeah.
That's when we should run and cut those in pieces. To some degree, credit cards have their place, but as long as you can pay them off.
It's for sure. It's a wild thing. It really is.
Yeah. So then tell us a little bit more about what you guys are doing at Eagles Flight Equity Group now.
Yeah, currently we have a couple of really great ventures we're working on. We really like hard money loans for, speaking of high interest rates, we like hard money for spec home loans. So essentially we're funding spec home loans for builders. And the common model is essentially they go to a local bank, and they should, before they talk to us, they should, and I will even tell them that. Go talk to the bank first. Well, I've already talked to the bank, and they won't give me any more money. Okay, great. We can help you with the entrepreneurial side of that, and it does happen a lot. Builders, they get cash crunch, and they have so much opportunity right now, and I'd love to talk about that. But they have so much opportunity, and they just need more funds, and so that's how we're helping the marketplace in that sense. And then we like build to rent also. We love the build to rent model, which is basically building a subdivision and renting it out instead of selling it, and we love that model quite a bit.
Yeah, that's where long-term wealth is being built. Instead of quick flips with higher check values, this is where you can really play the long tail. So why is it that builders have so much opportunity? Where do you see that for them?
Well, I think depending on who you talk to, we either have a shortage of 4 million or 8 million, but whatever the number is, it's huge. We have a huge
Yeah.
housing shortage in the United States, and then you got funny clickbaity articles about, oh, the market's going to crash. The market's going to crash. I'm like, how is it possible to have a crash when you have a supply constraint like that? So I just think it's a silly discussion. It looks to be evergreen almost. I think this housing shortage has a lot of things that's going to make it a persistent problem, and we just want to do what we can to help fix the problem.
Where do you think the crunch is the worst? Obviously, there's places like Cape Coral in Florida, which just ranked like completely oversupplied. I think they have like literally 4,000 homes for sale, and Cape Coral is not that big.
Mm-hmm.
So there is places that got brutally overbuilt by builders. Like you can actually see it if you're in those areas. You can see that it's all in new build. The builders are like lining up their homes. But where are these, whatever you want to call it, 3.5 to 8 million units actually missing right now?
Well, we really like Texas, some more tertiary. I think Dallas is probably a lot more healthy than other markets. We like Lubbock a lot. We have some other markets, Colorado, the mountain markets, and not quite the ski areas, but the outlying markets like Fairplay and Leadville. We like those markets quite a bit. Not necessarily Denver, but definitely north of Denver and south of Denver. We like those markets a lot too. So it really is, and you got a great point. It is always going to be a local thing. Also, you don't want to discount that, but we just feel like the Texas and Colorado are great for us.
Which part of Colorado?
They're actually mountain markets. They're close to the ski areas. They basically serve the ski areas with affordable housing and workforce housing, and that's where we feel our product is best fit.
Yeah, and I think this is where sustainable housing is. No, it's that working class house. Whether we talk Texas or something, it's like those B and C, and depending on where the economy is, people are moving around a little bit, and if they get concessions, they might move in a B, and if things get tight, they move back into the C. But it's that working class housing which is kind of the bread and butter of a real estate investor.
Completely agree, and I still think multifamily may not be as underbuilt per se, but I still think multifamily development's still pretty. I think it's got to be for the foreseeable future. I feel that's a opportunity if you look at the right markets as well.
So, how do you feel about other forms of housing? So, single family homes, they have their own constraints. Multifamily have their own constraints, and we will actually see. So, the tail end of the last cycle is being brought to market now. But we're not yet seeing is what's not coming to market. Like there's a lot less being put in the ground right now. So that is a multifamily constraint. But how do you feel about alternative housing methods? Whether it's like, now we're talking 3D printed houses, all kinds of prefabricated houses, things that might close the gap faster. Is that you think that's actually something that will help on the constraint, or are most of those not developed enough yet to make a difference?
Well, we have seen modular be somewhat of a fix, but my concern about modular is it's expensive to move. And so essentially, I'm not crazy about modular for that standpoint. It is cool. It is a solution. Definitely helps in other ways in terms of, okay, we have a labor constraint. And that's another problem with the supply constraint is we have a labor constraint with, you've got construction and subs aging out. So that's a potential fix. I'm really excited and a little bit bullish about 3D printing, but it seems like the adoption is going super slow, and I don't know exactly why that's taking so long. It's been around for a while. It's going super slow as far as I'm concerned. And so I'm like, why is it? And I don't know the answer. I think it's a great product. I think I would definitely use it personally if we had the opportunity. A good friend of mine, John, is using steel framing actually. Which I'm very excited about as well, and that's another way of getting speed to your project. I believe modular is slightly positive, if not, I would definitely do it. I'm just saying, I'm just like it's not a quickest fix as it sounds like. I think is the way I'd put it. Much more excited about manufactured prefabbed meaning the components are prefabricated and then you assemble them on site. I think that's a little bit more my speed. But having said that, there are some exciting developments, and you mentioned 3D printing. I feel like that should be a great solution. I'm just not sure why the adoption is going so slow.
Yeah, I haven't deep dive in it, but sometimes the doubt question, like, are we really investing into a shortage? Like, what happens if tomorrow they solve it with 3D printers?
Right.
And I don't know, maybe this is silly, but it's like one of those mental frameworks you have to work yourself through, and you have to remind yourself that solid multifamily housing has a place for the next 30 years. I don't know what's beyond 30 years, but not everybody is comfortable moving into 3D printed house within the next 5 to 10 years. So at least one good, maybe 2 good cycles we have.
Yeah, I feel comfortable with it.
Think through that.
From that standpoint, I feel like you can't go wrong. Anything, I personally just think the supply constraint is so wicked. Again, you make a great point about, okay, that particular market, you want to make sure that it's a good market, but as a general rule, I just don't think you can go wrong in any way you get any product to market, especially from the rental side. I think from a build-to-rent standpoint, 3D printing might even be more appropriate for that, because I think that's just like, oh, well, renters may be less picky, is kind of my thinking on that. I don't know. I'm speculating. I haven't tested this yet, but I'm feeling maybe build-to-rent might even be a better model for that. I don't know.
I think renters are less picky because they know it's more short-term. Like, they might only see themselves in this place for a couple of years and they're like, I can live with that. But once you start putting down your money on a house, you want to get as close to what you can imagine for your future as possible, I think. And that's where, like, I'll give you one of my things. I hate in rental units that the kitchen vent is not actually ventilated to the outside. And that's very common in rental units, because why would they put in the additional cost in making that work? And in the same way, a lot of the HVAC systems are central, and you just have to cool down the whole house, and you don't have individual units in the apartment, which is something I would totally build for myself, like, so that I can control it differently. So there's all those nuances that you will not do on a rental, because nobody will pay you the premium for it.
100% agree, and I think that's where, back to that discussion, maybe as long as you don't do something really weird with the design, and you can do funky things with 3D printing, you can never, not like, if you had like world-class carpenters, you can get anything done that you can do with 3D printing, but as a general rule, the shapes and the forms that you can do are almost wild that you can do with 3D printing that you would, You want a geodesic dome? Sure. You want a pentagon of your own? Sure. Here you go. Where, traditional methods are so much more constricting that way. So I think that is the opportunity that you could do some real art with your home if you wanted. But again, in terms of a rental, I don't know that I'm going to get that creative.
Yeah. Just going to pull this up here for fun. Look at these shapes that you can do here. Like, this is wild. It's like you live in a dome. Can you see these?
Yeah, it's pretty wild.
Yeah. I think probably part of, like, if you look at this picture, part of if I maximize it, you can't see it. This dome, like, if you look at the size of the printer, this might be one of the biggest bottlenecks, is moving this effectively and set it up at the scale that is needed. I don't know, it's just a guess. Actually, some of this stuff looks really good.
Yeah. It's exciting. I think it has potential. I'm just a little surprised it's just taking a while to get getting kind of momentum, and I'm not sure why.
I feel like I want to do a deep dive episode on this, and like really go into 3D printing and bring on a couple of people who know more about it and where are the bottlenecks right now. Because I feel like if any of those systems that, like you said it, modular, getting that thing moved is very expensive. So there's a bottleneck there. Prefabricated, partially that works to some degree, gives speed to the project. And that's even something we see in New York City. Like they do that with skyscrapers.
Yep.
Which really brought speed to how they were building a bunch of those luxury towers in the last couple of years in New York. But now I want to understand why 3D printing hasn't quite been deployed on that scale.
Well, I look forward to hearing those episodes, because I too am very curious about that. So it'll be fun to unpack that.
Yeah. So you did mention Texas, you did mention Dallas. Dallas seems to be the sweetheart of the investment world right now. It's like, well diversified. You don't have a single industry that makes more than maybe 25% of the overall productivity. You have a lot of things going for Dallas. And the interesting thing is we always ask ourselves, this has been the story for 20 years. Like, when does this stop?
Right.
What is your personal sentiment on that?
Well, again, the property tax issue is starting to become an issue. And again, the insurance issue in Texas those are legit brakes on the freight train. I think those are legitimate problems that people are having in terms of getting their multifamily deals to pencil. Or hey, if I buy this, can I buy insurance? And same with property taxes. If I buy this, what's the property tax war going to look like? And you got friends like mine, Lauren Cadillac's a property tax attorney in Texas that makes a career literally out of fighting this battle. And so you want to talk to Lauren Cadillac when you're doing this for sure. But I feel like aside from those issues, the fundamentals are still really strong in Texas. And if you can navigate the insurance and the property tax issue and you're ready for that fight, it's still, and it's just fundamentally just super great in the long term. I'm still pretty bullish on Texas overall.
Yeah. Texas has been the sweetheart. And it's like the way Warren Buffett looks at the U.S. economy, that's like what real estate investors in Dallas,
Yeah.
It's like, it's just that continuous growing sweetheart.
Well, and to that point, I'm overall very bullish about the U.S. economy. There's a lot of angst. It's really weird angst about, the U.S. is in decline. We're going to lose our dollar reserve status. I don't buy that. I really don't. Okay, you're going to trust Vladimir Putin and Xi Jinping with your currency? Really? No thanks, I'm out. And I think the rest of the free world feels that way, and I think Rue does too. So anyway, while we discuss this, she's like going to go back to sleep realizing the U.S. dollar is not going anywhere.
That's also kind of like Ray Dalio and Bill Ackman. They're sometimes pointing at that and they're like, but what is your alternative? Like, as of right now, you don't have a great alternative yet. It might play out. History has shown that there is a swing and then eventually there will be a different player. But I don't think we're quite there yet.
Yeah, I tend to agree. I just, again, I understand there's a lot of angst about it or a lot of traffic. And I actually think it's honestly, Russia and China are really trying to bang the drum to like, U.S. bad. And so they're perpetuating this myth. And that's what it is to me. It's an utter fugazi. No way, no how anytime soon. I'm skeptical that's going to change.
So we have strong immigration, more illegal than legal, but it's there, which further fuels the housing constraint. I'm not sure if that helps with the construction workforce that we need. Probably to some illegal degree it might. But it seems that the free world still wants to come to the United States. Like this country, as much as it seems maybe on the news and in the headlines that it's in pieces, it's still the world wants to come here for opportunity.
Yeah. Well, I completely agree. It's like turn off Twitter, do yourself a favor, turn off Twitter, turn off cable news, and go to a local strip mall. Go see what's actually happening. And that's why I think there's this weird disconnect, and it's a flaw of social media as far as I'm concerned, and a flaw with American politics right now. We can go there or we can't. It's up to you. I have a lot of thoughts on that, but we can go there or not go there. I don't care. It's up to you. They say don't talk religion, sex, or politics, and those are my three favorite things to talk about. So, but anyway, I'm a rude dog, basically. Having said that, it's like if you just pay attention to what's actually happening, it's a lot better story than we're getting told that it is. And it's a really strange situation where the vibe is really negative, and I'm like, what are you guys doing? We're like, we got a 4% or so GDP print lately from the Atlanta Fed. They had a nowcast of what their GDP looked like, looking at maybe 4%. So, and aside from interest, and another interesting theory we're working on in terms of interest rates is that the Fed is actually stimulating the economy right now with the rates being this high. And we can go there too, which I love to.
Yeah, why don't you deep dive on that?
Yeah, so anyway, there's a really interesting theory that there's an interest income channel. And so the effect is, and there's really questionable, and I'm really like, I have a very neoclassical background, and lately in the last 5 years, I've been basically leveling what I believe about economics and rebuilding it. And a part of that journey They're like, okay, and back in 2008 is an example why. 2008, how many economists were actually calling this the meltdown before it happened? Clearly wasn't the Fed. They were clearly caught flat-footed. And so you ask, well, who were the economists that got it right? And one of the number one answer I came up with, Steve Keen. He was an acolyte of Minsky, and Hyman Minsky has a very famous book or theory, instability hypothesis. Was basically the U.S. like the federal debt is not the issue. It's private credit is where you see the boom and the bust. And so once you start shifting your frame into that, that's the first step. The second step might be the interest income channel and the inability of the Fed to basically do much. And so when we saw COVID hit, it was fiscal that really changed anything. Monetary is, I basically, bottom line, monetary theory and monetary operations are basically kabuki theater to me. It's like, it's just a show. It's like, hey, watch me move the marionettes around. Now, I will say that, and people listening to this, and if they're a realtor and their commissions haven't gone anywhere for a year, they're probably like, are you sure about that? So there is the effect in the real estate market of, okay, we definitely see the Fed effect in an interest-sensitive market, but outside of real estate, think about how effective interest rate changes are. Like if you're a manufacturer, oh, wow, the Fed just hiked a quarter point. I might have to shut this factory down. No, that's not how to do it. It's all about, hey, am I being effective in selling my product? The interest rate that they pay on their interest is almost irrelevant. Now, again, you can make it high enough where it would be relevant, but marginally, so it doesn't change anything about what they're doing. And so my latest thinking on this is that the interest income channel, what they did they're paying a lot of interest, and so that's in turn being stimulative. And it's so radical to me to think that way because that is outside the normal theory out there in economics. But I'm starting to adopt it. I'm like, I think Warren Mosler is right about this. I think the interest rate is actually, we're getting so much interest income out there if you've ever seen a dog chase its tail playing or just sitting there goofing around. The Fed's chasing its tail by like, well, we got to bring inflation down. Well, why don't you cut rates and see how you do? Because again, what was the cause of the inflation to begin with? And then so again, for me, it was all supply constraint. And I'm team transitory. I am still team transitory. Transitory was longer than we wanted, yes. But and think about it. If you look at where we're at, the core issues between the supply constraint have worked their way out, and the kinks are out, and the inflation started really plummeting. And so now I don't know. I think the Fed is really, if I've ever seen a stuck state, in coaching they talk about you're in a stuck state. Well, I think the Fed is in a stuck state. They are so afraid of making a mistake that they can't take an action, and so they're afraid. Oh my God, if we cut rates, oh my God, inflation will run away. I don't see that story playing out, and I just don't know that they're confident enough to make I think they need a little chutzpah is what they need, Hannes. They need some chutzpah to cut the rates and go ahead and start cutting and see what happens. And you can always stop cutting. You can always cut it a couple times and see if you're right. But go ahead and start cutting. The story for cutting to me is much better than the story for not cutting. And again, I'm not a mainstream economist. I'm probably fairly radical in what I believe these days, but I just believe that what they're doing is chasing their tail.
Mm. The interesting thing is they always keep claiming that they're working for the people. If they were to cut rates, real estate developers would come back into the game. We would have less housing constraint, which would ultimately, for the average working class, be a healthier place to live. Like they could either buy a home because their monthly payments go down, or they could move into new inventory because the developer finally penciled again. So they're actually building a lot of pressure on the middle class. Yeah,
I just think it's doubly regressive too when you think about it. It's like, okay, who are they giving this interest to? Well, it's the people who have a lot of wealth already, and it's welfare in reverse for rich people. It's guaranteed income for people who already have a lot of income. It's like, what are we even doing here? And so again, I hope that they figure this out and try to just start getting rolling, because I could not agree more. There's a wicked supply constraint right now, and we just need to get going.
Yeah. Well, we will have to see how that plays out. This is where we just have to, you and me, we have to make sense of those macro environments and make best judgment and best bets for what we're trying to do with our life. That's the thing.
Yep. And then, in other words, we just need to make really good deals on dirt and go from there, I think.
Yeah. You did, last time we spoke, you did say something about dirt. I can't recall that. What were you saying?
Yeah, well, I'm basically saying hopefully, here's what it is. It's the disconnect between, and it's happening in multifamily too. It's like the sellers are in 2019 and the buyers are in 2024 or 2025. And so the disconnect between who, the bid ask is probably still there. I'm hoping that we can start to get some reality and and we're still fighting that battle daily. Hey, no, I want to sell it for 2019 prices, or 2020 prices. And I'm like, well, this ain't 2019 anymore, is it now? But again, some good saying since we're talking Texas, that dog won't hunt, as they say in Texas. So you just have to continue to battle away at it and see what we do.
Yeah, it seems so. We had a couple of quarterly updates from the major institutions, and they are ready to move in, like especially multifamily. They're ready to buy, and they prefer to a little bit early, and they're fine buying it at a higher interest rate and maybe floating it for a year rather than not catching the bottom.
I completely agree, and I think if you want to talk about a bullish sign, it's just they're coming off the sideline. They've been on the sideline for a while in some of those ways, and if they're off the sideline, I don't know what excuse we have to be on the sideline either. Again, it's harder when you're, you just don't have the war chest that they have, and that's the big difference. Is they have a check, almost unlimited checkbook for a lot of stuff they're doing, and Main Street syndicators, we don't have that yet. So it's an interesting difference in the business model, but I wouldn't have it any other way either. I'd just really happy to stay and serve Main Street because that's who I care about. But having said that, it just and I almost think the Fed should or somebody should come into the marketplace and say, hey, let's create some SBA product that says, hey, we're for a much lower interest rate, we're going to support developers, and we have a whole other discussion about legislation and speed of development because there's some wicked backlogs in terms of, hey, entitlements are just too doggone long. It's taking like 18 months is like the average for like a small multifamily. And it's like, we don't have the luxury of 18 months and we really don't. And so that's the other thing. And that's part of why we like Texas an awful lot too. Most of the jurisdictions, they're much more reasonable aside from like Austin, generally much faster in terms of just, hey, go for it, get your entitlement and go. And that's one of the things we love about the markets we're in.
I guess the real only downside about Texas is the summer heat.
It's hot.
That's when you have to go to the mountains, Colorado. And
that's definitely a thing too. You hang out in Summit County in August. It's 70 degrees, no humidity. It's pretty sweet.
Yeah. But other than that, Texas seems to be the place. And this is something that I have to remind myself of over and over again, coming from Europe. Texas is larger than France. So you can literally like forget about the rest of the United States and you can put all your eggs in one basket. And then if you do the Druckenmiller method, you just like, you put all your eggs in one basket and then you watch that basket very, very carefully. That's how it puts it. And you could make your entire life's bet in Texas and still do really well.
I completely agree. And there have been a ton of people that just, that's all they've done is just build in Texas and be happy. I've got a friend of mine in California. He's actually doing quite well in San Diego, and that surprises me. I don't know how he's doing it, but he's doing quite well there. And I think California is starting to get the picture that, they've had some great legislative reform to help start easing it. I think they're finally starting to get the picture. But man, I love the idea of California in terms of developing, but the actual process of I still don't know if I'm ready to tackle that monster. But I do have folks that are doing successfully, and I guess that's the flip side. If you battle the monster successfully in California, it's just the demand is almost infinite there. So in a way, if you can just stomach the battle, you're going to win. But it's just, I just don't know if I'm ready for that. At this stage of my career as a developer, I need momentum, and so for us, we're just going to go be happy in Texas and in Colorado for now, and go from there.
Mm. That really seems to be a thing, not just in the US. Like if I think about markets that have enormous growth, one of those could be India. And like I spend a lot of time in India sometimes, and I look at the market and I can see the opportunity, but it's nearly impossible to navigate for an outsider. And it's probably very similar in California. Like if you can stomach that pain, if you can get through this, the upside can be great and the market is there. It's just, do you really want to like go through that loss of quality of life because you have to go through that period?
Yeah, it's a pain train to me, and I'm just not sure. There was a time when I'm like 100% certain I was going to do that, but the more I get comfortable with what you can do in a market like Texas, it's like, why would you do that to yourself? And again, we need people to do it, and I thought I was going to do some affordable development out there, but I'm just at this point I don't know. It declines as I get older, the probability a little bit that I ever mess with it, but we'll see. It's maybe I'll just decide, hey, I'm going to fight City Hall now. I've had fun getting a base underneath me and building a business, and now I can go fight City Hall, or most likely the Karens in the HOA next door that are saying that old Walgreens it's a historical property. Really? That's a historical Walgreens. Okay, great. Great history was had there at that CVS. Anyway, not that I have any thoughts on this, Hannes.
Coming from Europe, again, initially I thought it's very funny was be declared history, and the further west you go, the more wacko it gets because there is no actual history.
That's right.
So
okay, unless you're a Native American, you probably haven't been there. That property hasn't been there longer than 100 years. It's like it's wild, the scale differences. Like an old building in Europe is 1,000 years old. An old building in Kansas City, Missouri is 150, and it's like, come on.
Yeah, that I find that quite interesting. I mean, it's also it reminds us how young this nation is and how roaring of an economy, like the Thrive, it's still exploring. Yeah. It's like anything out west, especially. It's so comparably young.
Yeah, I mean, literally look at Phoenix. Even the 1960s, Phoenix wasn't even a fraction of what it is now. Phoenix and Las Vegas, especially, it's like, and there's a good question: are we exceeding the water capacity of this area? I'm a little concerned about that, frankly. That's why I don't know that I would mess with Phoenix personally, but it's a good question. But if you're comfortable with the water supply, we'll figure it out. Maybe we're going to desalinate. I don't know what the word is, what we're going to do, but having said that, I mean, look at Phoenix. It's just crazy to think of that. There are neighborhoods that weren't even dreamed of in the 1960s, and it's just wild.
Yeah, water supply is also that's a big issue in California itself. Like there's in the farming they like have pipelines run from other counties and stuff, and then they start growing on land that initially was never fertile because there was no water. So there's a lot of engineering around those things where deep-pocketed farmers started to become very creative and moved a lot of water.
Right. Yeah, and it's going to be interesting to see if desalination can be a thing, but our oceans are pretty messed up too, if you ask me. So I'm just like interested to see if that ends up being a solution or not. But going to be interesting to see how it plays out. That's one of you can get really bullish and look at all the resources, and you talk about the United States. It's just like the resource base of the United States was so wicked good, and that's why. Part of the reason why U.S. became so dominant, the endowment was incredible, and so that's why it happened. And the question is, are we pushing the boundaries of that endowment? And that's if there is a concern, it is ecological concerns. Did we outkick our coverage, as they say, with environment? And so again, it's a very controversial issue. I'm not sure where I stand on it, but there's reason for concern about ecology, and are we doing the right things with the environment? And so if we mess it up, it's because we didn't pay attention to the environment.
But see, the interesting thing about the environment, nobody is actually, I think, actually bad intended. Like nobody goes out and says, I want to trash the environment. Right. It's like we all want to create value for ourselves and our families, and then potentially we have stakeholders. So like, for example, the property we're sitting on, this is a newly built multifamily construction. If you look on Google Maps, there used to be forest here 3 years ago. And that was just part of the landscape. And there was probably a bunch of wildlife just like living in there, a bunch of birds and insects and whatever else. And then we just flattened it out, and and obviously we can tell ourselves a story and we're creating, but we're taking a major part of the ecological system out of the system. We're creating housing, which again, that where is and in the US sometimes it doesn't seem as obvious, because like if you look at the land at the map, you're like, yeah, okay, but virtually 95% of the land is still somewhat untouched. Like if you go to Maine, literally 88% of Maine is still untouched forest. Like, so you feel like it's somewhat in balance, but then also, who would actually call it out if it was out of whack? Like, at what point does the ecosystem tip? And I think my gut feeling on that is that we have no idea.
Yeah. And speaking of Dr. Keen, he's doing some really interesting work on part of the flaw of mainstream economics is that we didn't count the cost of energy in production, and he's quite alarmed based on that. And so and again, he's infinitely smarter than I am, and I'm have when the smart guys that had called it once with the meltdown are sounding alarm bells about the ecology. It gets my attention for sure. And it's like, okay, are we counting the cost? And again, it's a local versus macro problem. It's hey, at the individual market level, it makes sense, but are we counting all the cost from a societal standpoint also? And so, again, talk about another deep dive. You could do a separate episode on that whole tragedy of the commons discussion in and of itself. And again, as a developer, I want to go, but at the same time, are we doing enough things to make sure that we're in a sustainable place? And you just got to ask that question again. And part of my concern, and here's the big overarching thing, the risk of being wrong about being more ecological is a lot better than the risk of being wrong about, we're not having an environmental problem. And if you're guessing wrong, the downside risk is really bad. So the risk reward of each decision, if we reduce our emissions and we're wrong, okay, what did we do? We just created cleaner air. If we're wrong about the environment and we're wrong about, we can keep burning carbon for the same, next 20 years, 30 years, 40 years, and we're wrong about that, the consequences are disastrous. So the risk asymmetry of ecology is really concerning to me also, because again, there's a lot of reasonable people having reasonable debates about, are we really having a climate crisis? And again, it's a political issue, and the problem with it is we can't talk rationally in America about politics. So a big problem like this, or immigration, for example, it's absolutely insane that we haven't had immigration reform. It's literally nuts. It's irrational that we don't have immigration reform. Same thing with ecology. We're not having a rational discussion. It's either you're a libtard or you're a MAGA racist. Okay, that's either or.
Yeah.
Really? So again, you can get me in a long discussion about that. We probably shouldn't even go there. But literally, America is a little crazy, maybe a lot crazy, also, but crazy good. So it's what are you going to do?
Yeah, it comes with all of those extremes. It's part of it. No, it doesn't. I mean, it's also, I think part of it is, imagine everybody here is, besides Native Americans, is to some degree an immigrant.
Right.
So who migrates away from the country? I think less than 5% of the people in the earth actually live outside of the country that they were born in. So what kind of person leaves home and goes out? And it's a different kind of breed altogether. So this is a nation of people who were actually willing to leave behind what they know, the families, and especially back in the days, like when Texas and Colorado was settled, these people knew they would literally never go back home. They just leave for good. They would never be able to talk to them. Best, maybe a letter. And even that is unlikely that it actually made the journey.
Well, and to that point...
Yeah, it's different kind of breed of
people. Yeah, to that point, I have a great-great-great-great-great-grandpa. At the age of 14, I think, if I could get it right, around 13, 14, came over from England in right around 1699 and got on a boat at the age of 14... and he didn't go back. And so it's in our DNA. And so again, a part of the American experience is, hey, go west. And keep going west. And maybe that's part of why I love the West so much, but it's a part of our DNA also, and part of why we're so great. And then at what point is that also why we're so bad? And so again, it's the counting the cost. There's a duality in a lot of stuff, and again, lots of interesting derivatives you can take on a conversation like this for sure.
Yeah, let's. I find that one of the biggest challenges personally sometimes, where I understand that development is at the same time taking down ecology. It's one of the Like when we clear land, when we look at it, I'm like, it kind of takes a hit at me. Even so, I do appreciate it once it's built out and everything, but it's something that I struggle with at times. And then I don't know. I think we find mental models to make just with ourselves and sleep well again.
Yeah. Well, and I think I somewhat have that same experience too, because my grandparents were farmers, and growing up, so close to the land like that, you have a love for it. And I absolutely love the mountains of Colorado, and preserving that specialness about it is important, and you can't just ignore it. So when you are creating habitat for people, can we do it in a way that doesn't completely destroy the habitat for the commons? And that's a really important discussion, and one I care about. So it's just not, hey, we're just going to dump some toxic waste while we're in here. As long as you're doing it with that sustainability in mind, I feel that, we have to have it. And I know there are certain people that are radical about it, environment, that are like, oh, you shouldn't be building new subdivisions. Well, we got a problem. Humans have a problem, so we got to fix that problem. So it's like, and that's the problem. There's no black and white solution. You have to do both of the things at the same time. And who better to do it than people that care about the other problem? So from the standpoint of, okay, an ecologically sensitive developer is probably far better than nothing at all, because frankly, then we're just stuck and we're not doing anything, and that's not good either.
Yeah. I agree with that. You just, it's better to have somebody who thinks about what's happening than, but again, it's you got to find the balance. It's like where are you creating a crazy bottleneck? And now again, I'm thinking of my home country in Germany. I feel like if you have one wrong bird in the project, literally you're done.
Yep.
I find that really interesting. Like one of my family friends, they're building basically electric energy windmills and power through wind turbines. And the stuff she tells me, like there can be $500,000 into the project. If the wrong bird shows up, they're done.
Wow.
If they're like, they literally so for the first year of the project, they have like a camera set up there, and they have specialists that check whether there are bats or not flying at certain times of the day. And the turbines have to be turned off at certain times of the day where they think there might be a certain migration of birds. They think. They're not even sure. But preventively, they have to turn it off. Every hour off is obviously a lack of income. And then after a year, if they can prove that there was no motion, they're allowed to operate it more efficiently. And then I'm like, okay, you're trying to solve for green energy. And I understand you want to protect the habitat at the same time. But at the same time, it like literally this one project took them 10 years to get it approved and get it through to put up the turbine. In China, it probably takes 10 months.
Right.
And I'm not saying that they are fully right. I'm just saying if you have a real issue which you want to solve for, like Germany is not energy independent by any means. So you have a real geopolitical issue there to solve, or you have an ecological issue to solve for. Maybe you need to sacrifice a few birds.
Mm-hmm. Yep. And again, it's a tough balancing act. And I think, for me, like my ultimate project is building a subdivision. I've got a small nuclear power plant, and I also have carbon scrubbers in the same subdivision. It's like, if I do everything I can do while I'm at it, that's great. And again, you're going to build a nuke in your own subdivision. Technology's there. You could literally do that. You could build a nuclear power plant in your subdivision that could power the whole subdivision. Again, pro-nuclear. If we could have a rational talk about it, I would love to, because you can't get where the environmentalists, the radicals that want it tomorrow, they want to completely let's crash. I don't know if you've ever seen them junk a car and they like put a car in a crusher and like recycle it. Like they want to do that with every car, literally tomorrow. And that's just not going to happen. So any rational transition to cleaner energy involves nuclear. It's just, there's no other rational way to get there. And so that's another thing that I hope to see reform. And I hear they're shutting down nuclear in Germany and in France. And I'm like, what are you doing? That's the wrong answer. What are you doing? That's backwards.
A couple of years back, when Germany decided to get out of nuclear, they literally built a new plant that was never turned on. They wrapped it up And then the Chinese were like, hey, we're buying this off you. We'll come and we'll happily take it. And they brought it to China, put it back up and run it. Because the Germans decided that they want to go out of nuclear. But interesting enough, at that time, at the same time, they didn't have the means to have green energy. So what happened is Germany ramped up coal heavily. And then at the same time, we started buying nuclear power from countries outside of Germany. Like we were actually importing energy that was powered by nuclear. So they were having fun with us, producing cheap CO2-free air.
Yep.
Electricity and they were selling it to us.
Yeah. Again, the irrationality, you just have to get more rational in these discussions. And again, do I think that's going to happen? I don't know. I'm not too optimistic. It seems to be going the other direction, but hopefully we just hang in there. I guess I'm just going to do my own thing here and hopefully try to do the part I can. But if we're talking, where we need to go, there needs to be a rational discussion moving forward.
That seems to be the hardest part, is that to be level-headed and actually like, okay, where can we agree on the facts first? And I think this is one of the biggest issues. People don't start with the agreeables. They immediately go to what's completely unagreeable to them. Mm-hmm. And then they just fight over that instead of going to the middle and like, okay, this is where we have common ground. Like, where can we work from here? And like, I think people need to start reaching out and work with both aisles, and otherwise,
and I think that this is very true. And kind of my big picture problem, why the social media is so terrible is, from where I'm from in Colorado, you go to a small diner, the chances of me calling someone a racist or a libtard at that diner where I was from originally, you would never do that because you're face to face. You have the social connection and you have that social tie that you're not going to do that. Well, social media is stripping away at the tie. And because it's easy, you can call someone a libtard or a racist on Twitter, and there's no negative repercussions. There's no negative feedback loop. And so therefore it's creating a dynamic that's in the politic that's really bad. And so
it's actually the opposite. You feel good about yourself and there is no negative feedback to it.
Right.
You feel like you gave it to someone.
What are we doing? And I just wish people would think about that when they're, logging online to go prove someone wrong. And again, there's a great quote that I love by T. Harv Eker. You can either be right or you can be rich. And a lot of people, there's so much, you get such a dopamine hit from being right. Oh, I get to be right. I sure showed that guy. And it's like, what did you do? You write some bytes on the internet and then you logged off. It's like, did you really do anything?
Do you think the same is true with happy? You can either be right or you can be happy.
Yeah.
It's probably true. Right, or you can be rich.
Yeah, it's probably true. I would agree. It's like, can you just step out? And again, I have a lawyer ego that's a monster, and it's doubly a monster because I have a big interest in macroeconomics, and I know I'm right about it. But okay, let's step back from that. And it's an interesting human phenomenon. And again, we're in a weird place.
I was listening to a very interesting podcast yesterday where researchers were actually interviewing people in real time about predictions and how they're feeling about certain things. And they did that for 20 years. And then they would get back to them and be like, hey, how did you feel about what happened in 1998? And they're like, oh, we knew it, we called it, la, la, la. And then if they actually go back to the data, I'm like, no, you didn't. Like, this is what you told us back then. And and I find that so interesting. I think we're probably, as humans, unless we keep ourselves in check, and that could be by writing or like there's one doc I have with my brother where we try to call our shots. And the reality is we're incredibly bad at like properly calling shots.
Yeah.
And then there's still, like, I was thinking of Druckenmiller the other day, and I'm like, he could just be that one gorilla that flipped the coin 30 years in a row and he always got ahead. You know, that is still out there. And then he might make up a theory around it, why he was right. So I could listen to him unbiased and be like, wow, the guy's just a genius. Or I have to be open to that he is just the absolute statistical outlier. And nothing that he says actually has merit.
Right. It's a function of narcissism. It really is. And to an extent, I wish I had a narcissist switch. Because to be successful in American economy is to be a marketeer. And again, that's a really interesting ethical decision. It's like, where are you passing good marketing into fraud. Grant Cardone pushes too far as I'm concerned. He's selling a bunch of crap that, and to be worse, he's marking up, he's literally front running his investors, buying a property at one price, turning around and selling to mom and pops, hey, buy real estate. Okay, well, I just marked it up $2 million and I resyndicated that to you. That's super unethical for me. I don't know how he's still getting away with it. Frankly, it's just really scummy to me. Anyway, again, that's a fine line between marketing and unethical. And I'm not even sure what the answer is. And again, I've been tending too far to the other side. It's like, well, I just want to be good at it. Well, if nobody knows who you are, you can't be good at it. And so again, it's a really interesting problem of an entrepreneur. Is like, you just want to be good. Well, if nobody knows you're not good, if nobody knows who you are, you can't be overall successful. So there's a degree of, you have to be a little bit of a narcissist to be successful in a market economy. And it's a real weird dichotomy that I struggle with, because again, I'm repelled by narcissism. But again, it's like, I guess I have to tell everybody, hey man, I'm the best developer you ever met. Who's the best developer you ever saw? Me, Douglas Dowell, is the best developer ever. Oh, really? Okay. Well, but that's what sells. People need it, and the human needs certainty, so you have to sell certainty. And when a guy like Grant Cardone's, and that guy is certain, I'll give him that. So it's like
he's certain that he will make money.
That's right. And he's going to take some money from you. He's certain of that too. That's all right. So again, it's that weird balance between the two.
There's one thing I really had to wrap my head around is it's what you said. It's like, you can't be good and you can't actually serve people if they don't know you. So to some degree, sales is service. If you get yourself known, and if you're able to do it in a way where you show people the potential pain that they have and the potential downside that they have by not working with you or for you, or participating in whatever you have to offer, I think there is an ethical path in that. It's just a very fine line, and I think sometimes people get a little bit too carried away with their KPIs, like whatever they think they want to measure, or how many closes they want. I'm like, put it out there, do it in a way that makes people understand that they have a pain point that you can solve for, and then let that work itself. Just especially when it's around investments, I think that you can't ever push anybody, and you shouldn't.
Yeah, I agree, and I think that's from the historical, guys like Warren Buffett, they grew up in an environment where it was in your DNA of how to do it ethically. And I think when the 70s and 80s came along, and when they invented and literally this is the beginning of the end for a lot of this stuff, was when they invented fractionalization of mortgages and cutting them up, and there was the handwriting was almost at the wall. It was just like, what was it? The Hyman Minsky had a great quote. It was like, what can be securitized will be. What? He saw it right then. He went to a conference and he was like, okay. You sure this is a good idea? And a lot of people made a lot of money, and therefore it was a good idea for a long, long time. The walls of Washburn Law School you met Douglas Dowell in 1999 when they're talking about repealing Glass-Steagall. I was like, oh yeah, man, let's go. And how did that work out?
Yeah.
Not so great. So some of these lessons from the Depression, we learned them, and now they're trying to unlearn them. And it's like, don't unlearn what you've already learned. And that's again, Hannes, I can take you on a ton of derivatives. We could probably talk for 7 hours straight. But literally, it's just an interesting thing that. And again, that's part of the problem. If we can scale the financialization of the American economy back a little bit, probably a good thing. And that's why I'm pro regulation. You can't just let Wall Street run the roost. You just can't. They cannot be trusted.
I think that's it. I think on an individual level, you want to have a solid understanding of the interconnectivity of everything, like where you relate to nature and other people, and you're like, hey, I don't need to take from them in order to have, and where there's enough to go around, and it doesn't come from scarcity. There's actually enough to go around.
Absolutely.
And then I think you do, for the outliers of people who cannot relate to that, need to make rules and laws that make sure that the scumbags don't go all the way out, and scam people who who have a different ethical framework that they apply to the world. and outside of that, I think that the market will decide what's best for the people. But I think it's somewhat like that. It's sensible. But then how do you translate that into culture? You literally have to weave it into the fabric of culture.
Yeah, it's a great thing, a great theory that we're going to self-regulate, but the incentives are just too strong for them to self-regulate. So as a marketplace, they can't even regulate themselves. So it's like, yeah, we can't trust you to do that. And then on the flip side is government can be corrupt as well. So you've got to really manage both. And it's, you got to, and again, it's a unwieldy problem for sure. So let's build some beautiful buildings while we're at it.
Right. So where can people reach out to you, connect with Eagles Flight Equity Group?
Best place is LinkedIn. Super easy way to get a hold of me. And just I'm on there every day, all day, networking and getting to know people and how we can help them. And for sure, happy to have a discussion in any way, shape, or form about any of these topics. There's one I didn't touch on. Trust me, I love, as you can see, Deep Thoughts by Douglas Dowell is definitely a thing. So love talking about any and all.
Awesome. Well, Doug, thank you so much for making time. I'm glad we finally got this on the record.
Yeah, me too. This has been fun.
Thank you for joining us at The Path to Wealth. We hope you enjoyed today's episode. Check out our upcoming guests and be sure to share it with all your friends and family that want to take their life to the next level of wealth.